The UK inflation data has just arrived, and it does not make for pleasant reading. The data shows that inflation has gone from 3.4% in March up to 4.1% in April. Evidently, this is not good news because when inflation goes up, prices go up, and that generally does not spell good news for the customer. But the key thing to address here is that this inflation is not being caused by people having more money than they know what to do with. It's not because people are spending a lot more money to buy luxury goods that retailers and companies are now saying, well, let's increase the prices and try and increase our profits at the same time. In fact, the opposite is what's happening. In this video, we'll take a look at exactly what's going on, what's behind this inflation surge, what we can expect going forward into the future, and, most importantly, what steps we can take to avoid, or at the very least, minimize our risk of being impacted by this inflation surge. So we'll break all this down in just a moment, but before we do, all I ask is one thing. It takes just 2 seconds. If you enjoy this video and you enjoy these kind of updates, please do consider hitting the like and subscribe button down below. And without further ado, let's get into it. So what is one of the main contributors behind this sudden inflation surge? Enter the energy industry. Allow me to explain. Ofgem, which stands for the Office for Gas and Electricity Markets, they set a price cap every 3 months, basically saying to gas, electricity, utility companies, this is the highest amount of money you're allowed to charge for your energy bills. It's basically the maximum amount that energy suppliers can charge. So for example, if Ofgem set a price cap of £1,000 per month, then these energy suppliers can't go beyond charging £1,000 a month to their customers. They have to stick at that threshold or below it. If energy suppliers went beyond that £1,000 threshold, well then there will be a whole raft of financial penalties, disciplinary actions, etc. So basically, whatever Ofgem says, energy suppliers have to comply with. Now for reference, the energy cap that was set by Ofgem from January to March of this year was £1,738. But heading into the next quarter of April to June, Ofgem increased the energy cap. And this is where the inflation stems from. From April 1st of this year, the energy cap increased by 6% to £1,849. That means the energy cap has increased by £111. Now you may not think that's a lot of money, but look at this chart just for context. The light blue lines you see on this graph basically outline how much of a contributing factor energy was to the overall inflation. Now, if you look at the last few months, you can see here, electricity, gas, and other fuels contributed minus 0.33% to the overall inflation figure. However, heading into April of this year, electricity, gas, and other fuels contributed a positive result of 0.18%. So quite clearly, energy prices are a big factor in the current inflation data. Now granted, Ofgem have said that for the next quarter, going into July, the price cap will come down by 7%, so the energy bills will drop. But we're still in May, heading into June. So we still have over a month of inflationary pressure going into the next quarter anyway. And as you can probably imagine, with Ofgem making the announcement that in July the cap is going to fall, every single energy company is now taking this quarter's opportunity to charge as much as they can. So of course, the upward trend in inflation solely down to the energy rates is going to continue until we get to the next quarter. Now the other big increase that has happened here is the jump in water bills. That's represented by these dark blue lines you see in the charts here. Have a look at this. In April of last year, you can see that water and sewerage contributed to 0.06% of overall inflation. Let's go through April of last year to April of this year, and you will see firsthand why this is such a big factor. So, 0.06%, still 0.06%. We're into February, still 0.06%. March, same, 0.06%. April of 2025, 12 months later, from 0.06 to 0.21. This has jumped by 0.15 percentage points when it didn't increase a single point over the remainder of the year. until now. It was reported back in January of this year that water bills across England and Wales were set to rise by £123 come April 2025. This was the largest price hike since privatisation and was even more than the £86 that was predicted by Ofwat, because the water companies had to adjust for inflation. That £123 represents a 26% increase in the overall price, meaning the average annual water bill is now looking to be around £603, approximately an extra £10 per month. But while you may be put off by that 26%, that's not even the more frightening part. Other regional water companies may charge something like 47%, so other households may have to pay even more. And this is very annoying for me because we're talking about the UK. We're not talking about a desert where there's hardly access to any water. This is a country where it rains more or less the majority of the year. I don't know what the exact stats are, but let's say something like 85% of the year, it's always raining. So how on earth has water suddenly jumped in price? That doesn't make any sense. Well, when you uncover the initial shock, the actual facts behind it is a little bit more jaw-dropping. Have a read of this. Water companies in England and Wales have paid billions in dividends, while simultaneously accumulating significant debts. The Financial Times reported that these companies paid £2.5 billion in dividends between 2021 and 2023, while their debt increased by £8.2 billion. This has been particularly concerning in the context of rising environmental issues like sewage dumping. Oh well, surprise, surprise. In the midst of accumulating significant debts and giving huge bonuses and paychecks to the shareholders, no wonder they haven't built any new reservoirs in the UK over the last 30 years. Instead of investing in the infrastructure, they've invested in making the shareholders' pockets bigger. But anyway, we digress. Putting aside the social welfare cause, alongside the fact that this appears to be one massive scam, the fact remains, water bills have gone up by 26% on average. And if that wasn't bad enough, we haven't even mentioned the council tax increases yet. Millions of people are facing council tax rises of 5%, with some councils being given special permission to go even further and squeeze their citizens even more. I used to live in a city called Bradford, and over there, the Bradford Council have increased the rates by 10%, double the national average of 5%. So those are the problems. But what about the solutions? How can ordinary, everyday people mitigate their exposure to this level of inflation? I've heard a lot of people say things like stocks and shares, investing in ETF funds, index funds, for example, are a safe way to go. That doesn't exactly seem like a great bet right now. Amidst all the uncertainty that's been going on with Donald Trump and the tariffs over in the USA, the stock market doesn't exactly take kindly to that level of uncertainty. I mean, just have a look at this for a headline, right over a picture of Donald Trump. The stock market had a bad week. It's your fault. Yeah, okay, I'm not going to lie. That is actually a brilliant headline. Just look at what the net effect has been. The Dow Jones slid by 200 points. The S&P 500 tumbled for a fourth day after Trump threatened tariffs on the EU. This uncertainty is really shaking up the stock market, so that doesn't seem like a good option at the minute. I only have one conclusion, and just before I get to it, quick disclaimer, I am not a licensed financial or investment advisor. I'm just a guy on YouTube offering his opinion and making this video for entertainment purposes only. My only conclusion is hard physical assets, primarily gold and silver. Both of those things have stood the test of time. They have been hedges against inflation and hyperinflation for so long. Usually when inflation occurs, currencies tend to lose their value and their purchasing power over time. But one of gold's most appealing characteristics is its ability to protect against inflation in the long term, primarily retaining your wealth and protecting your purchasing power. And this isn't just me, by the way. Both personal and private investors have been rushing to buy gold from the Royal Mints as sales grew 306% in a year, which is a record high for the Royal Mints. And with almost 60% of UK investors thinking gold will increase in value in the next 12 months, it's safe to say that investing in the safe haven asset to protect yourself from this economic uncertainty may not be such a bad idea. I take no pleasure in saying this, But it does look like the UK economy is on its knees right now, and it is in desperate need of help. Inflation is bleeding people dry. People have less money in their pockets, consumer confidence has reduced, they don't have as much disposable income to go out and spend as they would please, the bills are going up, the taxes are going up, everyone feels like they're being squeezed dry. The government needs to sort out the energy and utility sector and get the economy growing quickly. If the UK economy continues losing jobs, people that are unemployed stay unemployed for longer and don't have more money in their back pockets, then this situation could get a whole lot worse very soon. But let's wait and see what happens in the next quarter. Rest assured, I will try and keep you all updated on this as best I can. Thank you all for watching. Be sure to like and subscribe if you found this video useful. Drop a comment down below. Let me know your thoughts on the whole situation. I'd love to hear from you. I'll be returning soon in the coming days, but until then, see you all later and take care.